Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, we're back from vacation and the Precious Metals Conferences down south in the sun, and back to work, Eric. It's good to be back on with you here after a couple of week hiatus.
Yes, it is.
And it's
certainly
also,
a lot to talk about.
Yeah, it's also good to see the metals moving up. It's been almost a full month since the December FOMC statement, and just like we were talking about the last couple of months of 2016, it's been almost the same trading pattern as we saw a year ago when the metals just puked for the 2 to 3 months leading into the rate hike. And then once the rate hike actually was officially announced, the metals began a big rally. It's been a big week this week. Gold traded above 1,200 before being knocked down in the afternoon on Thursday, back under 1,200. And interestingly, the CME hike or reduced gold margins. I mean, a little bit of speculation, but it could be to try to ease some pain for the shorts, so we don't have a short covering rally to the upside. And silver's still trading pretty strong, right around 1680 here as we record in the access market here on Friday. So let's start off with the markets. What's your take here of the trading action over the last couple of weeks, and then this week in the continued rally?
It's amazing that we have followed the patterns as much as we would expect to see with the seasonality or the coming of end of tax loss selling, the transition of portfolio managers and the institutional crowd that they still participate to some extent in getting exposure to precious metals. So those more traditional asset managers have been kicking the tires of the sector after having seen the sector get annihilated. And so here we are with the first few days of the January effect, as it were, that we come to expect to see many a time is being played out as we expected. And simultaneous to this, there was that shift with the FOMC expectations. They were pricing in expectations that the Trump infrastructure spend was going to be gigantic, and that was dialed down even by Trump himself to formally, on his campaign trails, speaking of, $1 trillion plus levels of spending to now something that they speak of as like $550 billion. And so, the Federal Reserve was sending signals to the marketplace that they were actually really scared about how inflation expectations could run to the upside. I mean, they didn't literally say this, of course, because they're cagey and they obfuscate what they signal and all that, but that's kind of what the essential take-home message was by the marketplace when people reflected on the latest batch of minutes from the last FOMC meeting and their thinking process that led them to raise interest rates in the first place back in December. So the market, upon learning that the Fed was actually more concerned about, election considerations and theoretical prospects of what Trump might represent, as opposed to, data watching. We constantly hear the Fed talking about, we're data dependent, blah, blah, blah. It's all an illusion. They're basically led around by their nose as the market twists and turns and they respond to him. And here they are, diving into a kind of like a psychological effort to assess where Trump would change the market on a forward-looking basis. So they decided to be a lot more aggressive in their tone, and then the market realized that that's exactly what they were doing. And that also helped set the stage for the dollar not going berserk to the upside, which in turn helped the precious metal sector. So, for a while there in December, people were thinking, wow, we're going to make a run to 105 on the DXY index and beyond. And all of a sudden, the dollar just kind of faded a bit, calmed down, and that has part of what we are seeing supporting precious metals now too. And we've also seen, as we talked about in our last show, the really strange dynamics between the Japanese yen and the U.S. dollar in particular. It looks like, and I can't prove this, but it looks like there's been some level of official sector coordination between central banks to kind of dial down the pressure of monies flying into the U.S. dollar from all over the world. And the dollar move has been so substantial that I think it's actually begun to give some concern to policymakers. So who knows? Maybe that's something that's also going on behind the scenes. And we've seen a lot of giant moves once again this week with the Japanese yen versus the dollar. The dollar-yen cross went above 118 and then touched 113. And that's a really big move, a really big swing for just a few days. So there's a heck of a lot of turmoil out here, and the FX market is expressing that because there's so much turmoil within world economic activity, in the bond market having this convulsion ever since November 8th, when Trump was, presumed to be the winner of the election immediately, even before the dust had settled. We saw this giant shift in markets with the 75 basis point move in the U.S. 10-year Treasury. That's a huge, huge move in a really short period of time, and it was all linked to the dollar too. And now, combined with what the craziness that's been going on with India and the propaganda that's around that made people, come to the conclusion that India was going to literally shut off gold demand by, God knows how much percentage, but, people were speculating 30% or so. And when you have the first or second largest gold importer presumed to be getting gut-checked like that by the change in policies that India is unfolding and the disaster that represents, they actually have been consuming more gold via smuggling on a net basis. But anyway, all of these things all combined are making it such that January is playing out pretty much exactly like what we have been talking about as far as the rough outlines of where things would move. And it's a very positive outlook for precious metals in my estimation.
And I think the volatility is only going to continue. There's a couple of things particularly on the horizon. Number one being that I think it's fairly likely that Trump comes out and declares China a currency manipulator.
Yeah.
And that's not going to make the Chinese happy. And then second of all is the border tax. And as much as Trump is pushing for it, I think he's going to have a little bit harder a fight in the House and the Senate to get something like that approved than, say, the corporate tax cuts. But if we saw a 15 to 20% border tax implemented, that's almost like an unofficial 15% devaluation of the dollar. And so that's going to really affect currency markets as well. And one thing, Eric, I want to get your opinion on here. Nobody's talking about it. Nobody's thinking about it. And on the surface, you would think, there's no way that can apply to the metals. But sometimes politicians don't always think about smaller markets that are affected by bigger policy changes. And as far as if you look at the silver market, a massive amount of U.S. supply is sourced from Mexico. So nobody's talking about this, nobody's thinking about it, but if suddenly silver bullion is slapped with a 15% import tax into the U.S., that could really ignite chaos in the U.S. silver market. I mean, the U.S. mine production isn't even enough to produce the Silver Eagles. This past 2016, the numbers came in at 37.7 million ounces of Silver Eagles. Just looking at the numbers here today, the first week's sales for 2017 are 3.7 million ounces, so not a bad first week. But what's your thought on that, Eric? I mean, nobody's talking about it, nobody's thinking about it, and certainly the initial thought or reaction is, well, certainly they're not going to do it carte blanche and apply it to everything. They would make an exemptions for silver, but government officials and policies, they don't always think about that and take into effect smaller markets and the collateral damage that policies might have when they're targeting a GM or Chrysler, for example.
Yeah, that's a brilliant analysis and speculation on your part. I don't know where we would go. I would imagine that it's not likely that we would see a blanket 15% kind of tariff slapped on all imports. But if, by the same token, it's actually very likely that policymakers would be looking at silver and not even thinking twice about putting on that 15% simply because they despise silver and not fully appreciating the unintended consequences of that action because, quite frankly, half the time they're not fully understanding what they're doing anyway. I mean, we understand that when we look at how the Fed reacts to markets as opposed to trying to lead forward. They're led by markets instead. So yeah, that could happen, I would imagine. And if we really don't even know what the Trump policy is going to be when it comes to tariffs and whatnot. He's basically thrown lots of trial balloons out because that's his nature. He throws things out and gauges public reaction, and he's actually pretty good at that kind of way of operating by the seat of his pants, even though it really pisses people off. So that is fascinating speculation on your part, and I think that would have a big impact if it were to come. But I don't know. I have a feeling.
Again, we're not predicting that. I'm not predicting that by any means. But I mean, I've seen too many times where government makes a new policy, and I mean the automotive market is massive compared to the silver market. So most likely,
and it's also the industrial jobs that he's trying to bring home more so than caring about what happens with imports for mangoes from Mexico.
Exactly.
It's a very different thing. So to have some kind of 15% blanket tariff, I would think that that's almost likely as lightning striking 5 times in the same spot. I mean, it's not likely, but certainly some kind of tariff applied to silver is not a theoretical impossibility if in fact they're rejiggering 3-4 months into the future once Trump is in office the entire nature of our tariff policy. So that happens, and it probably would create a kind of an artificial shortage that would help push up prices for certainly the North American market, one would imagine.
Yeah, it's something that could almost be labeled as a type of black swan because I don't think it's on anyone's radar so far. I mean, we just got done.
I had not thought of that until you asked me the question. It's a fascinating scenario.
I mean, we spent the last week meeting with the CEOs, presidents, head of trade desks of the largest APs and wholesalers in the country down in Fort Lauderdale, and I guarantee you nobody else in the industry has it on their radar as even a possibility. So it would definitely take people by surprise if something like that would happen.
Yeah. I think
everybody's Google-eyed on the corporate tax reduction, and that's what everybody's focused on.
Right. So in any event, we definitely know some things that are on our immediate horizon. We've had the precious metals basically bombed out again from the period following the election, and we never really have had much of a rise in prices that will sustain the mining industry to be able to have a forward supply from mine supply that's healthy and sustaining the industry. We've had India go absolutely insane with their policies. We've had China with their problems with the devaluation of their currency moving a lot faster than the authorities there would wish to see. The point that you made about China possibly maybe reacting to being declared as a currency manipulator officially, and that actually has force of law. It's not just adjectives that a president would throw around from his bully pulpit. Once somebody in the seat of the president declares that China would be a currency manipulator, that executes a chain reaction of policy and even law that will compel the United States to do something with respect to China, and that may be, in fact, further tariffs as well, because it will further the case that Trump has already made that he seeks to have tariffs against Chinese competitors who have undermined the industrial capacity and then taken jobs away from the United States with his whole thesis and focus on North America. And Jason Barak and I were actually talking about this yesterday in our longer conversation that we recorded. We'll also tie that in and put that up on our Silver Doctors site so that people can have a lot of material to listen to over the weekend. It's very, very probable that that scenario will unfold. Maybe sometime by this summer, China has declared an official currency manipulator, and China has already demonstrated before that she's fully willing to send a shot across the bow of the Federal Reserve. I mean, back in that August period in the summer when the yuan devalued by 10%, or not 10%, excuse me, the S&P 500 corrected by about 10% after, I believe it was about 4% devaluation in the yuan occurred over a short period of time. And that was kind of like a transmission mechanism of what happens in markets, because the FX market is so huge. And when a dollar starts swinging around as a consequence to its relationship with what China was doing at that point in time, it translated into giant money flow moves in our stock market and freaked everyone out, because we had a 10-some-odd% correction in the S&P 500 after China purposefully shot a bow across the Federal Reserve. They wanted to make the Federal Reserve cognizant of China's desire to not see pressures on its own currency go in reaction to Federal Reserve policy about raising interest rates, which in turn would give more impetus for the dollar to rise. So all these markets are interconnected. And your speculation about China being declared a currency manipulator later this year and having see that as a major catalyst to what might happen with the dollar and in turn precious metals is spot on. I think we probably will see that. We probably will see that, in fact, help create the conditions for yet another large correction within the S&P 500 universe, or just generic United States equities. And that'll be interesting to see. We can see how those pieces of this puzzle fit together, and I think they're actually going to fit later this year. And that scenario is just going to produce fireworks in the financial markets.
Yeah, it's certainly shaping up to be an interesting 2017. And I must say here, as we record in the afternoon on Friday, I think the next 7 days are going to be the longest 7 days in history, Eric.
We certainly have to endure all of the crazy people that are going to be, sounding whatever opinions they wish to inject into the public debate at Davos. I mean, Davos is always kind of a circus in its impacts to markets, but now we have Trump being inaugurated on the weekend following Davos, with all of the global elite having their party, and they absolutely despise Trump by and large, so next week is going to be really weird. Buckle up, everybody.
All right, buckle up. All right, so we'll wrap this week's show for there. Certainly expect some fireworks in the markets next week, as well as the political sector, as the countdown begins to Donald Trump being sworn in as the 45th President of the United States next Friday, January 20th.
And he's going to lead the world from Twitter.
Right. So for the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.